Welcome. My name is John Mazzara with Remax Results, and today I have Mark Sandberg with us. Thank you for coming, Mark. And he's a lender, and he's going to talk to us about some of his unique products and programs that can help you get into home ownership. So, with that, Mark, tell us your name, what you do, the company you work for, how people can reach you, and then some of the unique things that you can do and how you do business differently.
Absolutely. Appreciate the introduction, John. So, been in the industry for about 20 years myself. Done a lot of things over my time. Ran a mortgage broker shop in the mid 2000s. That was great. Had a team in Roseville. Dissolved it at the end of 2008, kind of when things were getting a little bit rough in the industry, and
Mhm.
then went and worked for Wells Fargo for about 5 years. And during that time frame, I actually got into the operations side for a bit and did loan underwriting. And so that was a bit of a unique experience, and I enjoyed it, not to do it long term, but I enjoyed it to gain a certain level of expertise and understanding of mortgages because, sales, obviously, you have more of the gas, operations is more of the brakes. And so you really kind of learn what makes loans tick, what underwriting is looking for, certain things that flag various files, how to really read the findings and detail, which I think is important,
Mhm.
especially nowadays in doing a mortgage in 2025. I mean, it's becoming more and more complex by the day, it seems. And so,
Yes.
really understanding the guidelines and understanding what's required to get the loans done. And then, in addition to that, packaging a good, clean file up front. So, when you get your loan approval, it comes out of underwriting and you don't have a lot in the way of conditions where you're looking at a title work, insurance policy, maybe one off or one, here or there, like relatively simplistic conditions from the borrowers. But a lot of that comes from doing your due diligence in advance up front and making sure that the customers have a really good solid expectation of what is expected to get a mortgage in today's environment and feel comfortable with it moving forward. Because last thing I want them or you or any realtor partner worrying about is, oh my gosh, are we going to close on time? Is this
Mhm.
file going to work? We don't want that stress. We want the clients thinking about furnishings, and we want them thinking about all the fun, exciting stuff and drapes and everything else that they get excited about before they buy a house.
For sure. Well, the underwriting background that you have is truly unique. Most uh, salespeople that get into the mortgage business don't have that background, and they throw stuff against the wall, if you will, sometimes, and overpromise and don't know if it can really be done. But having had to be the one that signed off on the file, you're going to know if it can be done before it even begins. And like you said, nobody wants a file to blow up in the end or have extra underwriting things that just came up. So that knowledge and background is very useful, and makes you very competent in comparison to some of your competition.
Yeah.
Can you tell us about some of your products that you have access to that maybe other lenders don't?
For sure. Yeah. So, getting a mortgage in today's day and age is complex, but I think that there's some things that we have that separate ourselves from the competition. And a couple of those items are we actually, because we can sell directly to Fannie and Freddie, and we have our Ginnie Mae as well, so we can work directly for FHA, VA, USDA mortgages as well too. That gives us a lot more flexibility in what we can offer. And one of the things that we can do for conventional, I think that's really important to note, is we can go up to 100% AMI. So a home possible, home ready product allows for up to 80% AMI in the Twin Cities. And in those products, you get lower down payment requirements. You get a little bit of a premium on the interest rate. The mortgage insurance will be a little bit lower, things of that nature. So there's some perks that come along with that for first time home buyers, especially. But because we can go up to 100%, that's $123,000 for the average income in the Twin Cities. It's like 123,000, a little bit above and beyond that. But point being is that if you have an individual or a couple and they're above the 80% AMI and they're just below that 100% AMI, they can still get a lot of those perks where they can get in at 3% down potentially with a lower mortgage insurance, with a lower than market interest rate, which is huge because most lenders are unable to go above the 80% AMI. So it opens up the doors for a lot more flexibility for first time home buyers. And in today's environment where, you know, depending on what's going on, various market conditions, what the Federal Reserve has said, if Jerome Powell said something to work up the environment, or the BSI report comes out, maybe not as favorable as we like, whatever the case may be, there's various factors that can affect that interest rate pricing. And every eighth and a quarter of a point can count. And when you're just on the threshold and you're trying to get that offer accepted, that can go a long way to getting the debt to income ratio maybe increased a little bit to help get that buyer in through the door, get them a more favorable mortgage payment so they're more comfortable at the end of the day. One of the other things that we can offer too, I think that's pretty cool, is we have some really good non-QM products like DSCR, for instance. So these are loans that are designed for individuals who want to purchase multiple investment properties or maybe their first one. They're approved based upon credit and assets. So you're not looking at income, for instance. So cruising through 2 years of tax returns, which can be, a bit laborious, and then all of a sudden how much income is an individual documenting versus how much they're writing off, especially if they have, multiple properties on the Schedule E of their returns can be somewhat problematic, and getting those individuals qualified. And the beauty of what we have with this product is we can allow up to 6% seller paid concessions. So generally speaking, with a DSCR loan, you're going to see 2% seller paid concessions. And why this is important is because if you can get 6%, you take a $200,000 deal, that's $18,000, right? Um, and so at the end of the day, $12,000. Sorry,
Mm.
that'd be $12,000, not $18,000 on a $200,000 transaction. So at the end of the day, you can buy down the interest rate quite a bit. And if you're trying to cash flow on an investment property, that's a ton of money. And so if you're looking at the general rate of a DSCR loan, maybe be between like 8 to 10%, if you can get it down to 5.5%, for instance, by buying that rate down with those seller paid concessions, that's going to increase your overall cash flow on a month in, month out basis and help you get a lot more rate of return on your investment. Because obviously we have the equity that you gain based upon the general appreciation in the Twin Cities or wherever you're looking to buy in. But one area that we can really control is that mortgage payment, what you can charge for rent, and then individuals can apply additional monies towards their down payment proceeds, which I think is awesome, and that keeps their mortgage payment lower and allows them the cash flow.
Definitely. And of course, you can offer regular product too. So you do, of course, very competitive Fannie Freddie, FHA regular products, but you can go beyond. So some,
100%.
yep.
Yeah, all the general products that anyone else would have. Because we're a federally chartered lender, we have the flexibility, being able to sell directly to Fannie and Freddie. The other nice thing with that too is that we're underwriting and processing our own mortgages. So we're not sending them out to UWM or New Res or Penny Mac to be underwritten, for instance, right?
Mm. Hmm.
And you lose a lot of control in that process, unfortunately, because you could even run a scenario, for instance. So let's say you have a kind of a sticky income scenario. You could run it past an underwriter at UWM, but you end up taking the loan through New Res because New Res has more favorable pricing. Well, the underwriter at New Res may not agree with the underwriter at UWM. And so you all of a sudden lose that decision that was made, or if you had the income reviewed in advance, you don't really have that stamp of approval anymore. Whereas I can go directly to the lead underwriter or to an underwriter and run a scenario past them, get the stamp of approval, know that it's good, and put that in my file. And we're able to work towards a settlement date. So it allows for more flexibility in that realm as well, too, where you have much more assurance, I think. Also, you're not waiting around at the closing table for, Penny Mac sends their wires in batches, for instance. So
Mm.
you do a closing at 10 a.m. Well, the next wire is in batch till 1 p.m. Closing's done at 11:30 or 11:45. You got to go grab lunch before you can get the
Mhm.
keys because the next batch of wires doesn't come out for 2 hours.
Sure.
So little things like that, which don't sound like a big deal, but at the end of the day, add up, I think, for a much more quality experience in doing a mortgage.
Absolutely. Good, very good points. Excellent points. Now, what about first-time buyer programs that are specific to Minnesota? Are you able to do those? And if so, like MHFA, for example, or
100%.
some of the other ones that are maybe county or city specific?
Yeah, and we can actually get enrolled and enlisted with those county and city specific down payment assistance programs as well. And it's something that we just did recently where we set up New Brighton, where we had an individual who was buying a New Brighton. Obviously, you have to follow the parameters that are set forth by the city that you're working with there, but we do the Minnesota housing programs. So for the down payment assistance, and those I think work out really well. One little quick story, I actually have one in contract right now where it was in contract for $275,000. We were doing a Minnesota Housing Assistance Down Payment Program where we're getting them $9,000. They have the money to cover a lot of the down payment, not all of it, then some of the closing costs, so on and so forth. Long story short, home appraised for 290. We actually restructured the transaction to a $286,000 purchase price. We're able to get the concessions from the sellers. The sellers are happy because they're still netting the amount that they want to net. Everyone's happy at the end of the day because now we're able to get the proceeds. And what we've done is we've designed a situation in which everyone wins. The clients no longer have to take out the down payment assistance loan. Because I think the thing that people forget is that it's a second lien recorded against the property, right? And
Mhm.
so if the feds do continue down the path of lowering the interest rates and you want to refinance that mortgage, you have to contend with that second lien to be paid off. And quite often people don't have that money to pay it off. So it gets absorbed in the first mortgage. Well, that could potentially affect your ability to refinance the loan. And so in that instance, we were able to be pretty creative, adjust the sales price, get them seller paid concessions, and everyone won. So one of the things I try to lean on is just being really creative as well too in this environment, which I think goes a long way in getting those offers
Mhm.
accepted.
Perfect. So very collaborative, looking for solutions, not a rate quoting monkey. That's what I call the call centers, rate quoting monkeys.
We don't want that.
No,
Yeah.
no, that those days are over when it's the, 2, 3, 4% people are just searching on rate, but no, they're looking for a partner, a solution, somebody with that can come up with something like you just did now. This is just a question on subordination of the MHFA. Do you know, do they do that on their seconds on their purchases, or is it program dependent on whether or not they'll subordinate on a refi?
On a refi, they want it paid off.
They do.
They
Okay.
sell a house. Yeah, they want it paid off. So
Okay.
it's, it depends too, whether you have the deferred loan or you have the repayment plan. So it depends based on qualifications for that individual, generally speaking, income.
Mhm.
But ultimately, we try to get the deferred. Um, so if you can get someone a deferred loan, that's great. But then it's there and it's got to be satisfied. Now,
Sure.
it works a lot better for like an FHA transaction because you're looking at doing a streamline refinance and those are really easy loans. But for the conventional loans, especially because people can do the Minnesota housing on conventional loans, I mean, you have to contend with that lien. And if the rates are, in the next 6 to 18 months, somewhat significantly lower, people are going to want to capitalize and take advantage of that.
Sure. Well, you brought up an excellent point. Why don't you tell everybody what a streamline refinance is with FHA so that they know that they could utilize you to do that if they're out there with an existing FHA in this current environment, and what might happen in the future. So why don't you tell us a little bit about that?
Yeah, those are really great loan products. I mean, they're minimal in the way of documentation. You're not even really looking at a whole lot as far as income documents and assets and so on and so forth. You got to see that the mortgage statement is up to date and that the mortgage payment history is up to date. Updated things like identification and stuff like that. But what you're really doing is you're almost just resetting that loan interest rate and lowering the loan rate and giving them a lower payment. And quite often, you don't even need an appraisal in those situations, which I think is huge. So the cost savings are tremendous in those transactions, in addition to lowering those interest rates because you get really favorable terms. And what I always talk to people about is not only are you saving maybe two, three, $400 a month, but heck, keep your payment plan set up on auto debit moving forward if you're comfortable with that payment. Apply the additional money towards the principal of that loan and go from 29 years on your term maybe to 20 or 21 years if you can apply the
All right.
additional money towards the principal of the loan, turn into a term reduction loan, you know? And if you're already
Mhm.
making that payment and it doesn't bother you to make a $2,500 payment and your new payment's 2,100 bucks, apply the additional $400 towards the principal of the loan.
Good point. Good point. Well, I like that you're thinking of different ways to help the consumer, not just again just plugging them in, but looking at it creatively. So that's wonderful. Um, Is there anything else you'd like to share today? We can do this again, but is on this video, is there anything else you'd like to share that you think consumers should be aware of?
Yeah, absolutely. So I'd say that, mortgages are unique in the sense that there's not necessarily one mortgage that one company has that another mortgage can do or vice versa or can't do. We all work within the same wheelhouse. The Federal Reserve sets the interest rate pricing. Costs for loan, generally speaking, are within somewhat of a similar, range. 80 to 90% of the costs associated to a loan are third-party expenditures, title, recording, state, mortgage registration tax, transfer taxes, all that stuff. But I think who you work with really matters and the individuals that you're partnering with and experienced folks such as yourself, such as you and I. That's what really it takes to get your offers accepted and how you partner. The level of communication, I think, goes a really long way in today's environment. Making yourself accessible and available. People get my personal cell phone. My wife can attest this. I get phone calls at 7 p.m. on a Sunday night, and I will answer
Right.
them. And if I can, I'll get back to them relatively quickly. So, being able to answer
Okay.
those questions to make sure that they're comfortable with the process is huge. And then helping getting the offers accepted. And that goes a long ways with, partnering not only with you on the buy side, for instance, but the level of communication you can give to listing agents, kind of finding out what the sellers are actually looking for to make the offer work. And I always make a point to communicate heavily with the listing side too, as well, because I always think if I was a listing agent, I certainly want to accept an offer if I didn't know anything about the lender and their level of competency and how is the loan going to work out and do they have their T's crossed and I's dotted.
Awesome. Well, that sounds wonderful. Again, great communicator, and adding that extra touch, especially in a multiple offer where you reach out, which I know you do, to the listing agent to explain and answer any questions about the financing and the strength of the buyer and the offer, it certainly sets you apart. Not all agents do that. Mortgage folks do that. I would say if I had 10 offers, I might get 3 calls. That means 7 lenders never bothered to reach out or make themselves accessible. Well, I think that, I mean, that's great that you do that. Now, if somebody wanted to work with us together, we would love to work with you together. I could be your agent, Mark could be your lender. However, we realize you might have other relationships with other people and being in contracts, for example, with real estate under representation with another realtor. So if that's the case and you'd like to work with Mark direct, you're welcome to do so. We work a la carte. We work wonderfully together, but we work well apart as well. So you can reach out to Mark for your loan needs. You can reach out to me for your real estate needs, or you could reach out to us together as a package. Mark, I'm going to put your information in the body of the email where individuals can reach you, but can you share your phone number and your email and your NMLS number right now on the screen? Just can you tell me what that is?
Yeah, my cell phone is 651 338 0058, and my NMLS number is 404 674. And I can be reached at an email at mark.sandberg. So that's sand like at a beach, SAND, then B as in boy, E as in Edward, R as in red, G as in girl, at city wide, H as in Henry, M as in Mary.com.
Perfect. Awesome, awesome. Well, everybody, I would encourage you to reach out to Mark. He's got some really unique stuff. You can tell he's a great guy. He would love to do business with you, and I would love to help you as well. So with that, have a wonderful rest of the day, and thank you for watching.
Thanks, John.
You betcha.